9 years ago, I opened my first trading account with $5,000 and blew it up in less than 3 weeks. I then went on to lose another $300,000 over the next 3 years. Since then, I've made over $2 million in the financial markets, tested every psychological theory you can imagine, and spent thousands of hours figuring out why some traders make it and most don't. And what I discovered is going to make you genuinely feel uncomfortable, because the reason you're not profitable has nothing to do with patterns or technical analysis. It's not about finding some secret indicator or learning one more strategy. The reason you're losing money is because your brain is wired to fail at trading. And unless you rewire it, you're going to keep making the same mistakes over and over. If you leave this video right now, you'll keep thinking your next loss is just bad luck. You'll keep believing that one more course or one more strategy will fix everything, but it won't. By the end of this video, I'm going to show you the 7 psychological traps that destroyed my accounts for years, the mental patterns that cost me hundreds of thousands of dollars, and the exact rewiring process that finally made me consistently profitable. But more importantly, I'm going to reveal why the traders who make the most money are not the smartest ones. They're the ones who've just mastered something most people refuse to even acknowledge. All right, so let's start with something that most trading educators won't tell you. Your brain is literally designed to fail at trading. I'm serious. Evolution wired your brain for survival, not for sitting in front of a screen making probabilistic decisions with money. When you're losing in a trade, your brain releases cortisol. That's your stress hormone. It's the same chemical that floods your system when you're being chased by a predator. Now, your brain can't tell the difference between losing $500 on a trade and being attacked by a lion. It triggers the same fight or flight response. And what happens when you're in fight or flight mode? You make impulsive decisions. You panic. You do whatever it takes to make the pain stop. That's why you move your stop loss. That's why you close winning trades too early. That's why you hold losing trades too long. Your brain is trying to protect you, but it's actually destroying your account. Now, I didn't understand this for years. I'd take a trade, I'd watch it go against me and feel this overwhelming urge to do something. I'd close it, move the stop, add to the position, anything to make the discomfort go away. And every single time that I acted on that urge, I just made things worse. Here's what changed everything for me. I realized that discomfort is part of the game. Now, if you're not uncomfortable in trading, you're probably not trading correctly. One of the best trades that I ever took was one where I felt sick to my stomach the entire time. It went against me for 3 days. My stop was in the right place, but watching it sit there in drawdown was just torture. But I didn't touch it. I let my plan play out, and it ended up being a 7-to-1 winner. $14,000 of profit on a $2,000 risk trade. If I had listened to my brain's panic signals, I would have closed it for a loss on day one. But the solution? You need to recognize when your brain is in survival mode and consciously override it. That's not natural, that's not easy, but it's the only way to win. Lesson 2. Most traders are addicted to certainty, and that addiction is killing their accounts. Here's what I mean. Your brain craves certainty. It wants to know what's going to happen next. It wants guarantees. It wants to feel safe. It wants to feel protected. But trading is probabilistic. There are no guarantees. Every single trade that you enter is going to be uncertain. And that creates a massive psychological conflict. So what do most traders do? They try to create false certainty. They add more indicators to their charts. They look for confirmation from 5 different sources. They wait for the perfect setup that feels 100% certain. But here's the problem. By the time something feels certain, the opportunity is usually gone. Or worse, everyone else sees it too, and you're entering at the worst possible time. Now, I used to do this constantly. I'd have a setup that met all my criteria and my trading plan, but it didn't feel certain enough. So I'd wait. I'd look for more confirmation. I'd talk myself out of it. You know, the mind games you play with your head. And then the trade would work perfectly without me. I'd watch it hit my target and think, I knew this was going to work. Why didn't I take it? Because I was addicted to certainty. The traders who make money have accepted that certainty does not exist. They've made peace with the fact that any single trade could lose, and they're okay with that. They don't need to know what's going to happen. They just need to know that over 100 trades, their edge will play out. That's a completely different mindset, and it's what separates the losers to the winners. I remember the exact moment this clicked for me. I was about to take a trade and I felt that familiar hesitation, that voice in my head saying, but what if it doesn't work? And I thought, so what if it doesn't work? I'm risking 1% of my account. If it doesn't work, I lose $500 and I move on to the next trade. That realization was liberating. I didn't need certainty, I just needed to execute my process and let the probabilities play out. The solution? Start looking for probability. If your setup has a positive expected value over time, take it, especially if it feels uncertain. By the way, if you're not subscribed, you're basically trading without a stop loss. So fix it. All right, lesson number 3. Comparing yourself to other traders will destroy your psychology faster than any losing trade. This is something that no one talks about, but it's absolutely brutal for your mental game. You're on X or Instagram or Facebook and you see some trader posting screenshots screenshots of a $50,000 day, or someone talking about how they made $200,000 this month, and you look at your account, you made $1,000 or less, or a tiny bit more, and you feel like shit. You feel like you're failing. You feel like everyone else has figured it out except for you. Now, I went through this for years. I'd see other traders posting wins and I'd think, what's wrong with me? Why can't I do that? It destroyed my confidence. It made me take trades I shouldn't have taken because I felt like I needed to catch up. It made me increase my position sizes because I felt like I was falling behind. And it cost me a fortune in the process. But here's what I finally realized. You have no idea what's actually happening in those accounts. You don't know if those screenshots are real. You don't know if they're cherry picking only their best trades. You don't know if they blew up 3 accounts this week just before they had that profitable month. And even if it's all real, it doesn't matter anyways, because their journey has nothing to do with yours. Trading is not a competition. You're not racing against other traders. You're building your own process at your own pace with your own capital. The only person you should compare yourself to is who you were yesterday. Are you making better decisions? Are you following your rules more consistently? Are you learning from your mistakes? That's the only comparison that matters. I stopped following Trading X. I stopped looking at other people's results. I focused entirely on my own process and my own process alone. And my trading improved immediately because I wasn't distracted by what everyone else was doing. I wasn't feeling the pressure to keep up or to challenge them. I was just executing my plan one day at a time. And the solution was to unfollow anyone who makes you feel like you're not good enough. Stop comparing your chapter 1 to someone else's chapter 20. Focus on your own journey. All right, lesson number 4. If your identity is tied to your trading results, you're going to have a mental breakdown eventually. This is one of the most dangerous psychological traps in trading, and most people don't even realize they're in it. Here's how it works. You start identifying as a trader. That becomes who you are. And when you're winning, you feel like a genius. You feel successful, you feel valuable. But when you're losing, you feel like a failure. You feel worthless, you question everything about yourself. Your self-worth becomes tied to your profit and loss. And that is a complete disaster. Because in trading, you're gonna have losing days. You're gonna have losing weeks, sometimes losing months. That's just part of the game. But if your identity is wrapped up in your results, those losing periods will destroy you mentally. I've seen this time and time and time again. I went through this hard myself. There were months where I'd lose money and I'd feel like I was a complete failure as a person, not just as a trader, but as a person. I'd avoid talking to friends because I didn't want them to ask how my trading was going. I'd feel embarrassed, I'd feel disappointed. I'd kind of felt like I'd let everyone down, and it's not healthy and it's not sustainable. Here's what changed for me. I separated my identity from my results. I'm not a trader anymore. I'm a person who trades. That's one thing I do, not who I am. When I have a losing day now, it doesn't affect how I feel about myself. It's just data. It's just part of the process. And here's something else that helped. Having a broker I could actually trust took away a huge source of stress. When you're already dealing with the psychological pressure of trading, the last thing you need is worrying about whether your broker is going to execute your trades properly or manipulate the spreads. That's why I've used the same fully regulated broker for almost 10 years. The same broker over 3,000 of my active clients use. Having that foundation of trust removes one major psychological burden. Check the link in the description if you want that peace of mind. The solution: build an identity outside of trading. Have hobbies, have relationships, have things you're good at that have nothing to do with their financial markets, because trading is what you do and it's not who you are. Lesson number 5. Loss aversion is probably costing you more money than any other psychological bias. And here's what I mean by loss aversion. Psychologically, losing $1,000 feels about twice as bad as making $1,000 feels good, because your brain is wired to avoid losses more than it seeks gains. And in trading, that's a massive problem. Because of loss aversion, you'll do irrational things to avoid realizing a loss. You'll hold losing trades way too long, hoping that they'll come back. You'll move your stop loss, you'll average down into a losing position, all because your brain is screaming at you. Don't take the loss, don't take the hit. But here's the irony. By trying to avoid small losses, you create massive losses. I can't tell you how many times I've turned a $500 loss into a $5,000 loss because I couldn't accept being wrong. I'd hold the trade for days, watching it get worse and worse and worse, and hoping and praying that it will turn around. And sometimes, luckily, it did, which made the problem worse because it reinforced my bad behavior. But most of the time, it just kept going against me until I finally gave up and took a massive loss, or I liquidated my account. But on the flip side, loss aversion also makes you cut winners too early. You're up $1,000 on the trade and your brain says, take it, lock it in, don't let it turn into a loss, right? Fear gives in. So you close it at a 1 risk versus reward when it could have gone to 5. You're afraid of losing your profit so much that you never let your winners run the course. This is why most traders have a win rate of 60% or 70% and still lose money. They're cutting winners at a 1R and holding losers to a 3 or 4 or 5R. The math doesn't work. I had to completely retrain my brain around losses. I had to accept that losses are just the cost of doing business. They're not failures, they're not mistakes. They're just part of the process. Now when I take a loss, I feel nothing. I think nothing. It's just data. It's just one trade in a series of hundreds and thousands of trades. And I let my winners run the course, even when it feels uncomfortable, even when my brain is screaming, take profit. The solution? Accept that losses are inevitable and necessary. Stop trying to avoid them and start managing them properly. Lesson number 6 is recency bias. Now, recency bias makes you think your last few trades define your future, and that is completely wrong. Here's how recency bias works. Your brain gives way too much weight to recent events and not enough weight to long-term data. So if you just had 3 winning trades in a row, your brain thinks, I'm on fire, I can't lose, I should risk more. And if you just had 3 losing trades in a row, your brain thinks, I'm terrible at this, my strategy doesn't work, I should just quit trading. Both of those thoughts are irrational. 3 trades is not a large enough sample size to mean anything, but your brain doesn't care about sample size. It cares about what just happened. I used to fall into this trap constantly. I'd have a good week and think I'd figured everything out. I'd start taking bigger trades, I'd start bending my rules, then I'd have a bad week and think my entire approach was broken. I'd start questioning everything. I'd start looking for a new strategy. I was on this emotional roller coaster, reacting to every short-term result like it was meaningful. And here's what changed everything. I started tracking my performance over a series of 100 trades at a minimum, not over days or weeks or months. Over 100 trades. That forced me to think long term. It forced me to stop reacting to every little win or loss. Now, when I have 3 losses in a row, I don't panic, I don't get scared, I don't get stressed. I just think, okay, that's 3 trades out of my next 100. Let's see how the 97 go before I make a decision. And when I have 3 wins in a row, I don't get overconfident, I don't get too high. I just think that's 3 trades. I need to execute the next 97 just as well. And the solution to this is to stop judging yourself on your last few trades and start judging yourself on your last 100 trades. That's the only sample size that matters. Now, the final lesson and the most important of all, most traders think that they lack discipline, but that is not actually the problem. Everyone talks about discipline in trading. You just need more discipline. You just need to follow your rules. But here's what I learned after 9 years. Discipline is not the root issue. The root issue is that your rules don't align with your psychology. If you're constantly breaking your rules, it's not because you lack discipline. It's because your rules are fighting against your natural psychological tendencies. Let me give you an example. If your strategy requires you to hold for 3 days, but you're naturally anxious and cannot stand uncertainty, you're going to struggle and you're most likely going to fail. Not because you lack discipline, but because the strategy does not fit your psychology. I spent years trying to force myself to be a swing trader. I'd set trades and try to hold them for days or weeks. And I'd constantly close them early and move my stops because I couldn't handle the uncertainty or the stress. I thought I just needed more discipline, but the real problem was that swing trading did not fit my psychology at the time. Once I switched to day trading, where I could close everything by the end of the day, my discipline problems disappeared because the strategy aligned with my natural tendencies. And the solution is to stop trying to force yourself into a trading style that does not suit your psychology. Find a strategy that works with your psychology and not against it, and you will have much better results. All right, so here's what I promised you at the beginning: why the traders who make the most money aren't the smartest ones. And after 9 years and analyzing thousands of traders, I've discovered something that's going to change how you think about trading success. The most profitable traders aren't the ones with the highest IQ. They're not the ones who understand the most complex strategies. They're not even the ones with the most experience. The most profitable traders are the ones with the highest emotional pain tolerance. Just think about it. Trading is essentially a game of who can handle discomfort the longest without breaking. Can you sit in a losing trade without panicking? Can you watch your account draw down 5, 10, 20% without changing your strategy? Can you take 5 losses in a row without questioning everything? Most people can't. Their pain tolerance is too low, so they break. They change strategies or they quit. But the traders who make it, they have an abnormally high tolerance for psychological pain. They can sit in discomfort for weeks, months, even years without breaking. And that is the true edge. I'm not smarter than the traders who failed. I just personally have a higher pain tolerance after years of failure. I can handle more losses without quitting. I can handle more uncertainty without panicking. And that is a skill that you can develop. Here is exactly what you need to do right now. Accept that your brain is wired to fail at trading. Stop fighting your psychology and start working with it. Let go of the need for certainty. Embrace probability and accept that any single trade can lose. Stop comparing yourself to other traders. Focus on your own journey and your own progress. Separate your identity from your results because you are not your profit and loss. Accept losses as part of the process. Stop trying to avoid them and start trying to manage them. Think in 100 trade samples, not in individual trades, and stop reacting to short-term results. Find a trading style that fits your psychology. Stop forcing yourself into strategies that just don't work for you. These 7 lessons I just gave you cost me 9 years and over $300,000 of losses to finally learn and understand. Most traders will spend years figuring this out the hard way, but you just got the shortcut. The market does not reward intelligence, it rewards psychological resilience. It rewards the ability to handle discomfort without breaking. If you want to see the fully regulated broker that I've trusted for almost a decade, the same one that my 3,000 plus clients use, there's a link in the description. Having the right execution matters more than most people even realize. Thanks for watching. Drop me a like, subscribe, comment your thoughts, and I'll see you in the next one.